Okay, we have FOMC coming up in, where is my clock? Here it is. 10 minutes. 10 minutes. There we go. So I've got it pulled up. It's ready to go. There's no sound to it yet, but once it goes live, I will make sure that we have sound. Okay. So in the meantime, we're going to listen to some music. Let's see. USB 1. Okay. Is it this one? Guys, I don't know which mix you guys are. Oh.
So without further ado,
Okay, that's the one. Okay. I'll keep it pretty low. Actually, I'll turn it off for now. And then once we get into it, I'll turn it up and then pause the music and whatever. But okay, if you guys, yeah, you can hear me okay. Awesome. Amazing. Let's run through it. Let's take a look real quick. I'm going to hide this video. I'm going to make this really small, actually, so we can see what's going on. We'll see it. So then if anything happens, oh, it's at 2:30. Okay, I think Jerome Powell comes up at 2:30. I don't know what the heck is happening at 2 exactly, but 2:30 Jerome Powell comes up. Okay, so let's take a look at this for a second, right? Let me get rid of whatever drawings I had on there. And let me get rid of, I need to, okay, there we go. Now you guys can see it. I'm gonna go to the weekly and let's take a look at it on the weekly. Okay, let's just take a look at it. Let me get rid of this. Okay, there we go. Let's get rid of this and this. And let's just take a look at candles. Let's just do that. There we go. I like this better. And there's a couple of drawings I'm leaving on here on purpose because I think they're going to be really, really important, especially as we move into any kind of, I mean, there's going to be volatility, right? I think there's no question about that. There's definitely going to be volatility. We just got to figure out. We don't have to figure anything out. We just have to be patient. Okay. Where is this thing? There we go. Get rid of that crap and get rid of that. Okay. Now we've got everything that we need to kind of take a look at the market as a whole. Okay. And then can I compare with, let's do, yeah, we'll do yes. It's not gonna work. We'll just go back and forth, guys, with all of this. Anyways, so FOMC, we know we're getting most likely a 25-point basis rate cut. And honestly, I wish I knew more of what that meant. If I'm being completely transparent, I think I have an idea of like just the basics of it, but I haven't been through enough rate cuts in my trading sort of career, if you will, to really like be super confident, right? But what I can say is I don't know that it matters much. I think the market has definitely been getting ahead of itself when it comes down to taking any kind of, let me draw right here. So we took out all-time highs here, right? And the market's just been trading upwards. And it's like how we been getting ahead of ourselves when it comes to everything else as far as rate cuts go, right? And honestly, the way that I'm looking at this is some sort of retracement into either previous all-time highs, just like we had the first retracement, right? But now we've continued, took out all-time highs here. Are we going to retrace here? And then we have a beautiful monthly gap. If you look at it on the monthly, that is just waiting to get tapped. That's also aligning with the previous all-time highs. I wouldn't be surprised if we get this tap and then a continuation higher. We have, can't forget this one, a heavy BPR on the monthly. Okay, heavy BPR on the monthly. There's two places that I think price could go. Number one is going to be this monthly gap here, right there, right, or this one down here, which is this BPR. Okay, so just something to keep in mind as far as like what's open on the monthly time frame. On the weekly, it also, we align this on the weekly, so we have the weekly, which we haven't traded into on ES or NQ, but we did on YM. Okay, so that one is right here. You can see we left it open. That one is right here. You can see we traded into it on YM. So while that pushed us higher to just take all-time highs, right? It's still open, and it just became a breakaway for ES and Q because YM took it, and so we ran higher. YM has also failed to create all-time highs. See this? So there's a huge SMT to the downside. I think it's still valid. It's been valid for a minute, and so again, could like the possibility of us continuing higher from here, right? Yeah, it's pretty good. But if we are truly bullish on this market, right? If we're truly bullish, then I'd love to see something like this, where we have just a down move, tap into this, and then continuation higher. Okay. Let me put this. Can I put this on? I'm gonna put this on, guys. Is it this one? Nope. Is it this one? Is it this one? There we go. I feel like you guys can now see me a little bit better, so we'll roll with this one. FOMC videos here. It's still going. See, 2 o'clock is coming up. All right, let's check it out. Let's see what happens at 2 o'clock. Yeah. Let's take a look here. Okay, we just got an immediate rip to the upside. Oh my Lanta. Yeah, 2 o'clock. He has just ripped. This is the 5 minute. Let's go to the 30. I mean, we're still bearish order flow, right? Bearish order flow. No highs were taken. No highs. I mean, I don't know. Pretty bearish. Here we go. 2 o'clock is coming up. Oof, all right. Big push to the upside. Oh, right. Oh, fun fact. I don't want to listen to this guy. What is he saying? Let me pause this and let's listen to what this guy is saying.
And promote the health of our economy and the stability of our financial system.
All right.
These key entities are the Federal Reserve Board of Governors, 12 Federal Reserve banks operating around our nation,
it went back up to the
and
500s.
the Federal Open
Holy
Market Committee.
crap.
Based in Washington, D.C., the Board of
All right, so
Governors
the
is the
500s are
governing
clearly
body of
there's
the Federal
something
Reserve
there,
System.
right? S&T. Oh,
It's an agency
guys,
of the federal government
bearish.
that reports to and is directly
Bearish
accountable
right
to
here.
Congress.
Like you cannot tell
The
me
board
this is
consists
not
of 7 members or governors
S&T,
who are nominated by the President of the United States
right
and
inside
confirmed by
a
the Senate.
3-hour BPR.
Governors are appointed for 14-year
Beautiful.
terms.
Beautiful.
The Board of
I
Governors
like
oversees
this.
and
The
sets
downside.
policy direction for the system,
Beautiful.
including 12 Federal Reserve banks located around the country,
And
which
this
take
is like
the
we're
pulse
just getting
of the
started.
nation's
This thing
economic
can
health from a
definitely
regional
pump,
perspective.
take me out or whatever.
The 12 reserve banks represent different
Beautiful.
geographic regions or districts and were set up based on regional economic considerations. Although supervised
yeah.
by the Federal Reserve Board, the reserve banks operate independently in many respects. The reserve banks carry out a number
You know
of
what? I
core
should
system
have
functions,
checked if there was
such
any
as
rules against
supervising
trading
and
videos.
examining commercial banks and other financial institutions, enforcing compliance with federal consumer protection and fair lending laws, while promoting local community development and lending to depository institutions to ensure crucial liquidity in the financial system. They and the board also play a key role in another primary Fed function, fostering the safety and efficiency of our nation's
Holy
payment
crap!
system,
One contract.
including distributing currency and coins to banks,
Crazy.
operating electronic payment systems, and clearing our checks. In addition, the reserve banks act as the government's bank,
That's
providing
crazy.
services such as maintaining the Treasury Department's transaction account and issuing and redeeming U.S. government securities. They also act as a bank for banks by providing key financial services to banks, thrifts, and credit unions. The reserve banks
so
also provide a wealth of information
but like
on
recent
conditions
highs.
across the nation. Information that is vital
Did
to formulating a
RTY
national
take
monetary
out?
policy that helps
Yep.
maintain a healthy U.S. economy and a
Yeah.
stable financial
We might
system.
go for all-time
The board
highs
and the
on
reserve
YM.
banks together help ensure that consumer and community voices are heard at the central bank through consumer-focused outreach, research, and analysis. This helps keep the
There's
Federal
a
Reserve's
15
actions,
minute-
policies,
we
and
literally-
decision-making
we gave
attuned to
all
what's
of
going on in
this.
American households, communities, and
Wow.
businesses, which are the
Okay.
foundation of our economy. The third key Fed entity is the
That's
Federal Open
crazy.
Market
Should I take
Committee,
this in a
or
funded?
FOMC, which brings together representatives from the board and the reserve banks to consider the
Crazy.
state of the U.S. economy and set a course for our monetary policy in a manner that seeks to promote an economy that
All right,
works
this
for
guy's
all
super
Americans.
boring. So
The 12-member
we'll turn it back up in a second, guys. Don't sweat it. Don't you dare sweat it, boy. Big old fat candle. That's what that is. Big old fatty. A fatty candle right there. Guys, I might take this on a funded. Just for giggles. Should we? Should we take this in a funded? Let's go for it. We're just gonna. Let's see. This one here. I'll show it in a second. Hold on. I'm just trying to get my credentials logged in and everything. Do not do this. Probably not the best thing to do. So don't do this, guys. Okay? Don't do this. I'm telling you, it will burn you. You don't want that. And I definitely don't want that for you. Okay, let's see. Boom, sell the ask. I'm gonna put her stop way up here though. What should we target? Down here? I'm within the 1-2 minute thing, right? We might get cooked on this one, guys. Might get cooked, but anyways, you see where? Let me see if I can. I'm gonna put this same thing right in here so you guys can see it. Let's see, 24,505. 24,505.25, and then 47 right there, and then 20 right there. Sell limit 1. Can I not sell this? Yeah, right. Okay. What am I? Is this? Yeah, it's a paper trade. Then what the heck? Can I not? Well, I guess I can't. Okay, I guess well, anyways, there it is. If we get stopped out, you guys know, like, it's right there. Look, 24,547, 547, and then 320s is down here. So there we go. Yeah, that's crazy, guys. I'd be like, yeah, I'm moving that crap so close. There is no reason for me to, like, just be in this crap doing this. No way. Heck no. Don't do this. It is super risky and not recommended. This isn't a funded account, by the way. So definitely don't do this. Mistake, because I'm not one. Guys, I think this isn't even gonna count towards, like. Yeah, I don't think they'll let me, whether I make this or not. Like, Okay, apparently it is restricted. Okay, so maybe we shouldn't have done that. I wonder if they're gonna take my account. If it came down to it. I mean, we're just here. I think when 2:30 comes around, we're gonna get the real move, right? Like, I mean, obviously this is a real move. Don't get me wrong, but I think we'll get the actual direction of the market as soon as it happens. I think people knew the cut, right? I think that's not a big deal. Well, what I'd be looking for is like, are we gonna do something else down the road after this? Like, what does this look like for next year? No cuts, some cuts. I don't wanna. I got you. Holy crap, guys. We're dumping hard here. Crazy. Oh, by the way, this is gonna be so stupid. Guys, I freaking. Oh, okay, so we did it. So I took 2 contracts here. My entry is actually down here now. That was so stupid, guys. Yeah, so this is restricted. Uh, there, take profit hit. That's crazy, guys. we took this FOMC on a funded. Let me show you. It's up. It was a $3,000 trade, but I had 9 and then the rest of this. Crazy, 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 crazy. I also took it on one of my day trade accounts. What is this website? Day Traders. So I got 4 evals with them. But again, I don't know. I don't even know. Maybe it's a violation. Oh, okay. Day Traders does allow it. Okay, they do allow trading news. Okay, great. So these funds I will keep. The ones in funding ticks, they'll probably get erased. So I'll be back, 3K. It's crazy because they said if you blow this account during this time, that's it. But if you make money, we'll take that money away because it's in violation of our rules. All right, whatever. Yeah, they just told me that I won't be able to keep that trade. It's nice. I mean, being able to see 12K on this, I was able to make 9K, regardless. Today, trading 4 cons from here to down here. So I still got the majority of this leg, right? But it is what it is. Give me my mind back. Oh, I gotta write this down, guys. Okay. 11 minutes till Mr. Powell. Okay. All right, so now we have our range at this point, right? But it's an SMT range. SMT, 3-hour, bearish. Oh, now we got a bullish SMT. Nope, still bearish. Still bearish, still falling structure. What are we gonna do now? Let's see equities. Let's see what equities are doing. Can you guys see this? Yep. PLTR is dropping. Took out liquidity here. I like this to the upside, right? I guess it's sort of like it's already done its job. And I've got nothing. I think, yeah. Once Mr. Jerome Powell speaks, I think we'll be set, right? Maybe they'll forget about my account and I'll be able to just keep that profit. That would be nice, but I'm expecting it to not be kept. I'm trading with day traders. That's what it's called, day traders. I'm doing their evals right now. So this right here. I'm doing the 50Ks. I got 4 of them. I think you can do 350. I don't remember. I just know that I think you can do 3 of them. So that's why I took 3. I have 4. I took 3. Sorry, I took 4. You can only do 3. No scaling rule. No trailing drawdown. 5 micros, 50 or 5 minis, 50 micros. $3,000 target. $2,500 trailing threshold. This is end of day, and you have to trade this for 4 days, which is kind of nice. And I think that's just sort of the better accounts. They let you trade for about 4 days, and then it's just a good measure of like, okay, now you can trade. Same thing with funding ticks, right? They allow you to, you have to trade for, I think it's 3 days, 3 or 4 days, 3 days. And you basically get, they kind of filter out people that way. So I do like that. I really, really like that. But, you know, a lot of people also fail trying to just go all in. So I'm trading these. I'm taking small hits. You know, if I can let runners run, like yesterday I had $500 or $400 day, and then today was a $900 day. So smaller. I mean, still pretty aggressive. Not gonna lie, but smaller hits than usual. Not necessarily looking for. It's just got to make sense, right? It has to make sense. I can't be taking these trades and then just going for like the full amount. So anyways, let's see. Straight to funded. What does this look like? It looks like there's no consistency, maybe? Let me see. When I'm lost. I opened 5 take profit trader accounts. I'm gonna What? What's this? I guess I had an order open on one of them. That sucks. Oh, that sucks. I think one of them had an open order and it just ripped and it just went against me. One, two, three. Yeah. One of them must have had an open account or an open order because it just got failed. That stinks, man. I had them already halfway through, so 50. Yeah, it's all right. It's all good. I'll take the yeah, I'll take the 4 accounts. $40. Okay, 71. That sucks. All right, so at least 4, which is good. 40. 1671. 16, 65, 16, 40, and 71. Hello. Okay, so then this is, yeah, that kind of stinks, not gonna lie. 40 and then 71. Okay. Yeah. Okay. But it's boring. Again, there's no direction here. Okay, so what's going on here, sir? Yeah, reload this page. Oh, freaking Jerome Powell already.
Based on the Consumer Price Index and other data indicate that total PCE prices rose 2.7% over the 12 months ending in August, and that, excluding the volatile food and energy categories, core PCE prices rose 2.9%. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal.
Okay.
The median projection in the SEP for total PCE inflation is 3.0% this year and falls to 2.6% in 2026 and to 2.1% in 2027.
Okay.
Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4 to 4.25%, and to continue reducing the size of our balance sheet. Changes to government policies continue to evolve, and their effects on the economy remain uncertain.
Can you guys see this?
Higher tariffs have begun to push up prices in some categories of goods, but their overall effects on
You guys
economic
can't see
activity
this,
and
huh?
inflation remain to be seen. A reasonable base case is that the effects on
You guys can
inflation will
hear
be
it?
relatively
Okay.
short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside,
Oh, you
a
guys
challenging
can see it.
situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. With downside risks to employment having increased, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.6% at the end of this year, 3.4% at the end of 2026, and 3.1% at the end of 2027. This path is 1/4 percentage point lower than projected in June. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Policy is not on a preset course. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
Cool.
Great. Thank you. Chris Rugaber at Associated Press. As you know, Fed Governor Stephen Myron has kept his position at the White House, even as he's joined the Fed board. This is the first time, I believe, the Fed's board has had someone with executive branch ties in decades. Does this compromise the Fed's independence from day-to-day politics? And relatedly, how can you maintain the public's perception the Fed is politically independent with this dynamic? Thank you.
So we did welcome a new committee member today, as we always do, and the committee remains united in pursuing our dual mandate goals. We're strongly committed to maintaining our independence, and beyond that, I really don't have anything to share.
Okay, and then just as a quick follow-up, I'm sorry, can you and other Fed officials have spoken extensively about the impact of tariffs on inflation, although perhaps with many companies appearing to eat the tariffs, tariffs may be impacting the labor market and other parts of the economy instead. Do you see that as a possible outcome here, that tariffs are the reason we're seeing some slowing, particularly in the labor market, rather than in inflation? Thank you.
You know, it's certainly possible. You know, we're beginning to see, we have begun to see goods prices showing through into higher inflation, and actually the increase in goods prices accounts for most of the increase in inflation, or perhaps all of the increase in inflation over the course of this year. Those are not very large effects at this point, and we do expect them to continue to build over the course of the rest of the year and into next year. And you know, it's also possible that there may be effects on employment, but that I would say if you're looking at why employment is doing what it's doing, that's much more about the change in immigration. So the supply of workers has obviously come way down. There's very little growth, if any, in the supply of workers. And at the same time, demand for workers has also come down quite sharply, and to the point where we see what I've called a curious balance. It's, you know, typically when we say things are in balance, that sounds good, but in this case, the balance is because both supply and demand have come down quite sharply. Now demand coming down a little more sharply because we now see the unemployment rate edging up.
Nick Timmeros of the Wall Street Journal. Chair Powell, do economic conditions and the balance of risks no longer warrant a restrictive policy setting?
So I don't think we can say that. What we can say is this, that over the course of this year, we've kept our policy at a restrictive level, and people have different views, but a clearly restrictive level, I would say. So, and we were able to do that over the course of this year because the labor market was in very solid condition with strong job creation and all those things. I think if you go back to April and now look at the revised job creation numbers for May, June, July, and August, I can no longer say that. So what that means is that the risks were clearly tilted toward inflation. I would say they're moving toward equality. Maybe they're not quite out of equality. We don't need to know that. But we do know that they've moved meaningfully toward greater equality, the risks between the two goals, and that suggests that we should be moving in the direction of neutral, and that's what we did today.
Under what circumstances would a larger than 25 basis points rate cut be warranted, and how seriously was that option entertained at your meeting this week?
There wasn't widespread support at all for a 50 basis point cut today. You know, I think we've done very large rate hikes and very large rate cuts in the last 5 years, and you tend to do those at a time when we feel that policy is a place and needs to move quickly to a new place. That's not at all.
I don't know what's going on here. Give me a second, bro. Alrighty. I don't know what's going on here. I'm gonna reload this page. It's like being super weird. Alright, whatever. Yeah, I agree. Market has already priced in rate cuts. Is this going to be our manipulation? Right, this manipulation, accumulation, manipulation, distribution to the downside. Right, all of this
in place. I guess I'm just, trying to square the shift in the rate forecast in the SEP towards more cuts than just 3 months ago, with the fact that the forecast for unemployment didn't change.
Yeah, I think you could think of this in a way as a risk management cut, because if you look at the SEP, actually, the projections for growth this next actually ticked up just.
All right, this is like not working. So, yeah, I mean, I think price is just gonna target down here, right? This monthly gap, and then that would be kind of it. That's all I'd be looking for. So, all right, well, that was lame. Peace.